Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, July the 24th. The year's 2022. Let's talk trading, weekly, open, and gap. As you all know by now, these videos are for educational purposes only. Your results may differ from mine. We are in the last full trading week of the month, so just to start that week off right, let's just talk about risk management. Don't lose any more than you're willing to lose on any one particular trade. Make sure your stop loss is in place and your position size is sized properly. So for the month, we're 190 pips below the monthly open. You can see we're in the lower wick zone of the previous month's candle, 225 off the monthly low, 193 off the monthly high. For the week, we're putting in the opening range for the week. All the weekly gaps have filled. As you can see, the pound gap down, moved up, and now is coming back down 7.8 pips below the weekly open. As I mentioned, we're putting in the range here, the opening range for the week. As you can see, we're inside the opening range for the month. So we're going to have a nice little overlap here. For the year, 1,542 pips below the yearly open. We are inside the inside bar that we put in 3 days ago. Doesn't appear to be that much inside bar action on the dashboard at the moment. $50 pips. After a little over 7 hours of trading, you can see we have 3 pairs over 100, with pound New Zealand clocking in at 159. Buy zone. In fact, some trader wanted to know what this indicator was called. It's just a TRO buy zone. It's an oldie but goodie. Let's see. I guess I modified it in 2014, but I think the original was back around 2008 when I first started on. I think it was about 2008 when I first started on MT4. It's one of the first indicators. As you can see, we're getting in that sell zone range. And I was dinking around on some forums, and there was somebody that wanted an indicator that showed the distance, some distances and increments of a average daily range. I thought, that's kind of, I already have an indicator that does something similar to that, the TRO ATR lines indicator. Okay, the range is large enough to do a rat zone trade. As you can see here, we put in a high, put in a low, and the green rats had a chance to feast. So near the pivot point, bias is long. Looks like that kind of paid out in the beginning, didn't pay off much the second time. So Bambino Flex says go long. What's the yesterday's high or the previous session high below R1. For the pivots, we still haven't gotten anywhere near that monthly pivot. The weekly we've already taken out, and the daily we've already taken out. So you can see on the daily though, this year we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 missed pivots that have not been filled or have not been touched. Oh, would you look at the size of those wick zones? So you can see price is probably going to be inside of those wick zones. Because if you look here, that Friday candle was practically a doji. Only about 3 pips between the open and the close. So we're going to see what happens here. Wick zones are going to be, you're just going to spend a lot of time in those wick zones. Let's just put it that way. Looking at the range, if you didn't tune in on Friday, you can see here last week we've had 1, 2, 3 weeks in a row decreasing range. So something's going on. I think we've got FOMC coming up this week, so look for the markets to go crazy. Then again, they might not. We'll just have to see. You can see here we haven't had much range on the hour. Actually, that's the M30. But still, we had a couple of big ranges here, 25 and a 27. You can see that right there. But we don't like to trade wall mall lines this time. Lower high, higher low. You can see there was plenty of trades. It's not showing because we've moved on, but right there, there was a lower high trade. And so far, your stop would have never been threatened. Now, we talk about stops a lot. We talk about, managing the risk. And one of the things that I'm coming to realize is you really have to be willing to lose a certain amount on a trade if you want to go for the big wins. Because what will happen is, let's just say you went long here. As you can see, it pulled back, then it went up, then it started pulling back again. And the tendency would be to exit the trade. But as I mentioned, if you put this trade on and you had your stop down here, say maybe at 119.58, that low, below that low, made it break it. It was never threatened. So why would you want to take the small pips? Let me just move that out of the way. You can see a 3-ball here, 3-ball here. If you just wanted to play, half that distance, say, I think price will move about half that distance. That would have been a nice trade. You would have picked up some nice pips. But along the way, once again, you can see price moves up and down. It just doesn't go up in a straight line. And so you can see, 4, 5, 6 pips sometimes price going against you, that many pips. And that can be disheartening, can make you want to exit the trade. But as you can see here, it was pretty much making higher lows and higher highs pretty much the whole way up. There was a couple exceptions here. But once again, with that stop not being threatened, there's no point in exiting the trade, cutting your winners. Now, what I'm thinking, what I might have to do is look to see if a trade has gone a direction for a certain amount of time, chances are it's going to continue versus chances are it's going to pull back. So maybe we're looking at M5 candles. You can see maybe it's going to move for a couple of hours in one direction, and then maybe you can look for it to do a reversal. I mean, we could easily look here. Let's put on the H1 candles. So you can see here that it would put a 1-ball in, then it moved up. Now it's kind of oscillating. And you can see here, looking at price action, it's like, well, we got a lower high here. We don't really have higher lows. So if anything, you might be thinking, well, maybe I should exit the trade, see if price could maybe get to break this high or not during this hour. If it, falls below the hourly open, maybe I should exit. Maybe I should exit if it breaks these lows. Once again, this is just, you can look at the chart and start to make your decision. But it's just one of those things where you as a trader, you have to decide what you want to do. I think like on the, what was it, last week I called something where I thought it was going to go to 2000 or 1.2000, and it fell down. Then I called something else. It'd be like, okay, it's going to do this. So, but those are all long-term calls. And the thing is that I'm more often accurate than not on those. But I usually don't trade them because I'm more of a, 1 minute, grab 2 pips and get out kind of trader. But I'm really starting to think that I have to start looking at whether or not prices actually threaten that stop that I say I'm willing to lose. And if it hasn't, then just let it run. Especially if you, say, have a bullish, say, H1 coupled with a bullish M30. So once again, you can see here, even on the M30, it never really threatened that stop. It went up, higher low, higher low, higher low, higher low, lower low. Now it's coming back. But once again, that could have been, a nice 10 to 20 pip trade there. And if those amount of pips make you happy, then you can take the pips off and then wait for another setup. Because I was reading something and they were talking about price moving slower on these higher time frame charts. And I always have to laugh because price is moving at the same speed. Doesn't matter how you compress the data. It's either going up, it's going down. It just doesn't matter how you compress the data. But when you start drawing these horizontal lines, it really doesn't matter what time frame you're looking. It's just because you're doing movement. And that whole thing about the time in trade, you can look at it and see. It's like, okay, how long did it take this price to get back here? It was like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars. That's 300 minutes on the M30 or 5 hours. So maybe you go, well, it takes about 10 of these M30s or 5 hours. Maybe I should let it go for 1, 2, 3, 4, 5 hours. And then after that, call it good. Take my pips off the table and cash in. It's just one of those things you can just, look at, figure out on your own, and maybe you can use that in your trades. Because, as I've mentioned at the end of every video, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.